Welcome everyone. I'm just going to go through a very limited number of charts today. Let's just start by looking at the dollar. So we've got an incredibly busy week data-wise. We've got Bank of Japan tomorrow. We've got Fed on Wednesday, Bank of England on Thursday, and US jobs on Friday. So very, very packed week. So looking at this dollar on the daily chart here, you can see we are coming off of these highs. The reason why I look at the dollar is because if we see this dollar drop off, generally it means that it's risk on in the US markets, and what the US does, the rest of the markets tend to follow. So if this dollar is going to fall back, that gives breathing room to the markets, which could sustain the US markets and give them a perk up. Talking of which, if you look at the Dow has had a pretty good day today so far. A couple of 100+ pips up off the lows. Just coming into resistance. So if the Dow finishes here and can pull back the bolt as the week unfolds, that bodes well for the end of the year. However, so far since August, all these highs have been sold into. We've got a series of lower highs here. So that was the first drop off. And August, September highs sold into, October highs are sold into. So if all we see is a move into this 33,000 or slightly lower, and if we push into that resistance and sell, then we could come all the way to, could come under 32,000 very easily. All right, so market at the moment, particularly this reaction today, seems to be pegging its hopes on continuation of the freeze in interest rate hikes. But as we all know, inflation is still stubbornly high. And so my money would be on selling into last week's highs, which is 33,280. So selling into that resistance up there. FTSE had a bad day, but likewise did finish higher. So again, if we sustain 7,300, but for me, the FTSE is in a massive box. There's the support, there's the resistance, and we are just chugging around that. We broke up there in April. We came back inside of that in end of May. We've been inside this box ever since. The decision on the Fed on Wednesday, like I said, could give an indication of what to expect as we get into the end of the year. So if the FTSE, as with the Dow, or if all it does is climb into 74.5 and sells, then I can see the FTSE ending the year down here at 69. But if this box is sustained at the moment, it looks as if it's possibly could. Then we could find ourselves back up at 7,700. Gold is still sitting very, very high, up at the 2,000 mark. If the Fed do increase rates, then I can see this pulling right off. We've got a gap down there at 1830. Now, who knows when that's going to get filled? This week, this month, this year, who knows? But it's been on a huge run since that gap up on the 6th of October. and we're very vulnerable up here because we sold up here in May this year. So there is an awful lot of congestion up there in the the gold. Oil is trying to hold this support, but has had a negative day today, closed lower. This is a crucial area, which is no surprise considering the immense amount of data we've got coming. So if we hold this 81.5, I can see that pulling right back up. My money's on this oil going back to 92.5, but that is, I took a long off the lows today and got stopped out. So I think that's going to drop back, could drop back into the 80 level. So I would see where we are on Wednesday on that one to see if that one can pick up again. Right, let's look at a couple of commodities and then get straight into a few stocks. And then I'll leave it. So corn, highs are sold into. And just look at this orange juice. This is unbelievable. So if you want to find a breakout, my suggestion is you look for this kind of pattern. And you can tell when the pattern is working because so we had highs up here in February, March. So we started the year from this support, broke up, and fell back off of this level up here, this trend line, and we broke up. So this is symbolic of a very, very strong market, obviously, because we broke up through that resistance. But if you see a market drop under a trend line and go back within three or 4 days, that is incredibly bullish. So just because a market breaks the trend line, don't lose sight of it. It's very, very common for, particularly in commodities, to break through a key level, but if it breaks up again, then start buying pullbacks again. When orange juice found support in July and August, we absolutely just rocketed. All these little pullbacks are just getting bought, and it is not holding back. So this is a good sign. Just if you see it, like I said, the end of a consolidation, a bullish consolidation, is where you get a break under support. So if you look at, let's have a look at gold. Obviously, gold's had a fantastic run. So gold did the same. We broke. Actually, no, gold didn't. Gold just fell back into key support. So we had all this support up here. Looks as if it's gonna break up here, and then it fell over. It fell back into main support and then just ran. So maybe gold's been pretty tough to trade this year, really, given because of this failure here, and then this gap up without. If that closed the gap, I'd have been all over it. So if you didn't buy high, then you just completely missed out on it. So let's see what happens with gold. Still, at least the miners are doing well. Talking of which, let's look at a couple of miners. Let's just look at PAF. So so we drop right back to key support, March support at 13. This looks good. If we can now hold that and stay above 15, then I think we could pullbacks to 15, 16 are still viable. And I think we could, if we get back to 20 and possibly 20 plus, if this does anything like the pattern that we've just seen in orange juice, we could see 23, 25. That would be my target if that one works. Let's look at the Barclays. So we did close higher today, but it is not a reversal pattern. For that to be a reversal pattern, we need to close above 132. However, we did see an increase in volume and we did have a higher close. So if that one closes above 132, then I think that can at least recover to, let's get rid of that. That can at least recover to potentially 145 plus. Huge amount of support down here. So there is a possibility this could come and find 125, 126. If we close above 135 here, I think that could create a bit of a catch-up surge on there. But just be aware this could still very, very easily drop to 125, maybe even lower. Okay, so just take it easy. Lloyd's, well, Lloyd's is very, very similar. Very feeble close today. Let's look at HSBC because that's had great results. See, that's looking lower. So these banks are vulnerable. So you need to be very cautious when attempting to trade them. Right. Anything you want me to look at? Because I'm not going to spend a lot of time here today. I know what I was going to show you. So another look at dark trace. This is building quite nicely, this one. But it's still not really proved itself. HSBC missed the profit target. Right. There was one bank that had a good day. There was one bank. It obviously wasn't HSBC. Okay, let me think about that. MON Money Supermarket. Right. That's one I've not. I did track quite a lot. I've lost track of that one. Yeah, it's sitting up. We had this big. Whenever you see a big bar like that, it's a really big day on the 17th. You tend to find they retrace back, but not all the time. So it's in theory that could come and see 245. Where are we? 260. I don't like the volumes. I don't like the volume here, so really makes me wonder if this could pull right back. It is a bull flag, but I'm just not happy with the way. Yeah, I 245 will be if you want to get into this one, I would try and wait for 245. We're not that far away, are we? No, we're only 15p away from that. I think it's well worth trying to wait for a pullback there. And yeah, I'm going to watch that one with you. I'm going to put that on my waiting on my watch list. You'd buy at 248, right? Okay, that makes sense. That makes absolute sense. Um, yeah, foods looks good. Now what else are we going to look at? Just look at Tesco's. A couple of bellwethers. Yeah, see, the market is not in great shape. Basic materials. Let's have a look at Rio. Yeah, so that the 48.40 got bought in Rio, and that is doing well. You bought Reckitt's, right? Okay. Right. Yeah, that's a very interesting one. Decent volume, decent. Again, that's not. I would much rather see that close above 56 for a full reversal. Right. Okay. You like this one a lot, right? Um, yeah, this has got came off in July last year, did well, and came off May this year. Yeah, last November. Yep. Okay, so last November we were down here. Peeled right back into January and then ran. So yeah, I mean, cyclically, this appears to be a good time to buy into this one. Let's put that on the list as well. Um, okay, anything else you want to look at? I am a huge fan of this one, but volumes are improving on this Pfizer, but it's got a lot to do to pick up. QQ, I like QQ a lot. This is making higher lows and higher highs. So I like QQ a lot. BT, very again, same old pattern. Volumes are really pathetic on that at the moment. It is very vulnerable to a takeover though. Very, very vulnerable. Um, that's all I really want to look at. Don't think energy stocks. Don't like energy at the moment. Obviously don't like retail. Not much going on in across to the US. Yeah, this FCX copper mine, massive copper miner. There's still a lot of earnings to go through. That FCX looks great to me. Looks very, very good. Wasn't that long ago. We're up there at 40, 45 bucks. And here we are down. Yeah, I like FCX a lot. Right, unless you want me to look at anything else, I'm going to disappear. So just a week to be very, very cautious. We've got a lot of data to get through, and all eyes on the Fed on Wednesday, and then I think jobs on Friday. But it's all going to be on the Fed. If that Fed pauses, that could give the markets a leg up, depending on what they say in the press conference afterwards. But anyway, so we need to look at the outcome of the US market on Friday. Brilliant. Thanks for coming and joining me, and take it easy and bye for now.